morning. It's another day in paradise. Welcome. This is the eighth wonder of the world. Today's video is going to be on here is how you play the ratio game in the stock market. My current 7,500 Robinhood portfolio. My strategy to 1 million. Okay, let's jump into it. Today the market's open. As you can see, I usually look at the live, see how it's doing for the day, and my main focus is all. So with this all, it's all about the all to me. Nothing else matters. All this 1 day, 1 week, 1 month, 3 months, 1 year. To me, that's all for day traders, swing traders. But me being a long-term investor, I look at the all. So pretty much, if I can, as of now, I'm at 5.42%. If I can keep that in a down market, I'm happy, because I know in the up market, I'm gonna be able to double, triple it. So my main concern now, my strategy is to, in a down market, to at least hit around between 5 and 7. Nothing below 5 in a down market, extremely down market. And in a previous video that I've posted, I talk about how I achieved 6% with 93 positions, and pretty much all my positions were declining except 9 of them out of a 93. So I was able to maintain 6. So now, as I'm starting to build up more confidence in this, I'm really seeing how really the end game is the ratio game. You know, to me, if you're investing in the stock market, everybody's got their own concept of investing. As long as you're investing inside the stock market, you're getting a percentage. You're already playing the compound interest game. Whether, you pick 10 solid companies, 20, 30. They say don't diversify, but I think that's bullshit. Diversification, what I've learned is my passion is to diverse in sectors, whether it's water, supermarket, travel, technology. I mean, I have over like 50 sectors that I've listed and I've developed over the past. This is going on my second year investing, but in the beginning, I started to have my own. I started to develop my own sectors because I know the stock market, they have sectors where they already have names. But to me, when I was trying to understand it, it felt more confusing. They go by like consumer staples, discretionary. To me, it's just so vague and it didn't really click with me. So I'm gonna show you a little sample of my strategy, or the sectors that I invest in. Pretty much, I developed a firearm and ammo sector, a transportation sector, insurance sector, satellite communication sector, defense contracting sector, raw material sector. This was interesting, and I broke in the raw material sectors into 3 parts. There's lumber, there's steel, and then there's cement, and then there's the energy sector. Something new about the energy sector that I came across is the 3 different. Well, when it comes to petroleum, there's 3 different sections. There's upstream, there's midstream, and then there's downstream. I'll go into detail over those 3 sectors, but there's just something that I didn't know. So me investing in sectors, it opened my mind up to more how really the world works. So very interesting. Okay, have that. Have the technology sector. I have the 3D printing sector, gaming sector, global banking sector, primary dealers with the Federal Reserve Bank, of New York sector, the finance sector, the cannabis sector, the tobacco sector, and then index funds. Now this is really, I get really deep into the index funds. I break them down. I'll just go over the quick, the 11 that I'm um, more understanding more about index funds to break it down to. This is all to simplify it in elementary form. So there's iShares, uh, which are owned by BlackRock. There's SPDR owned by State Street. There's S&P owned by S&P Global. There's Vanguard owned by the Vanguard Group. It's private. Then you have ETFMG owned by EFT Managers Group. That's private. Wisdom Tree owned by Wisdom Tree. Power Shares owned by Invesco. Global X ETFs. That's private. Schwab owned by Charles Schwab. Guggenheim is private. Then lastly is PIMCO, owned by Alliance SE in Munich, Germany. That's where the headquarters is at for Alliance SE. They're not on the. You can't buy it. You can't buy that stock in the American market. I already checked, but pretty. I'm thinking later on that I have it on there because it always changes. Well, with me being an investor in the Robinhood app that I've seen. Next, I have REITs, dividend stocks, and those pay monthly. These are other index funds, dividend stocks, but these are different companies, way smaller. Um, there's Buyback ETFs. There's the pharmaceutical sector, travel sector, the mining sector. Now this is interesting that I've discovered and pretty much came up with a theory and strategy. But to me, these companies will be making trillions once other planets are colonized. Um, they will find extraordinary elements of life, and to me, this is generational wealth. So I want to get in on these companies because once we start exploring space, whoever's got the experience now on Earth, they're gonna get first dibs on other planets, whether it be um, on moons, planets, meteorites, just whatever. These guys are gonna be first because they already have the equipment, the knowledge now. So I want to invest in this whole sector. Um, as you can see, I got 20 companies listed under the mining sector, and then it goes into precious metal sectors, where I break them down into precious metals. These are all ETFs. Palladium, that's an ETF that you can get. Gold ETFs, those are the ETFs and funds you can get in companies. And then platinum, ETFS has an ETF for platinum. And then silver, as you can see, silver has its own sector and ETF. So if a lot of me, I invest in physical precious metals and ETFs. So just to see the balance in the global market. Then I have the supermarket sector. I invented. I just came up with this to break it down even where it's not confusing, where I can see really the numbers. I have an international soccer sector. This is interesting. I started looking at these companies and I started to see a lot of the big ones were holding companies. So I have, even though these companies can fit into like other sectors, I pretty much group these into a sector by its own, holding company. I think these will be the big ones because they've been around for the longest, so they have the track record. So this is my holding company sector. As you can see, it's like I got 83 of them so far, and there's more. I have the media sector. I have the telecommunications sector. I have the waste management sector. A lot of people don't know about that. it's just so many companies in the world, and people are just so wrapped around the big mainstream ones. And to me, to understand, like, there's so many other companies out there that are making money grow, and it's all about this is how I'm playing the ratio game. Buying I'm right now I'm building my foundation. I'm just buying one share in each company in each these sectors. Go through these sectors. I want um in the future I will have all these companies within my portfolio, all these sectors. Next is the audio industry sector. Next is the medical devices equipment sector, motion picture sector, home improvement sector, audio sector, fashion sector, fast food sector, coffee sector, fitness sector, private company sector. Now these I just pretty much, this is for my own knowledge, to get an understanding of other companies that are out there that are really massive, but that I'm interested in. You know, if they go IPO, I already have, you know, knowledge on them already, but I already understand like where they sit at now. Next is the hotel sector. Then I have the chemical sector. Then I have theme park sector, sporting sector, toy sector, intellectual property sector, cosmetic sector, water utility sector, the corn sector, sugar sector, and then the meat producer sector. So pretty much from what I've counted, there's about 50 sectors here, 54 now that I've counted. Usually I do I'll count these monthly, so I'll do another one in April. Total companies that I've counted 600, but again I'll count them again because I always add to them every month, so the number changes. So that's pretty much how I break down my strategy, and you know, give me clarity, and not, it doesn't matter to me if the market goes up or down. I'm my game is all about the ratio game. It's all about the percentage. It's all about the all. Nothing else matters. That all game, because really that all is gonna care. Is gonna, if you look at your total, that percentage is what's gonna make that total. According to the rule of 72, that's the game that I'm playing, is to just double my portfolio in that sense, and not get all stressed out about, oh, I gotta buy more shares in this company. I gotta buy more shares. You could play that game. You know, it's the same concept. But in a down market, if you only hold 10, you know, those tens are so susceptible to a declining market that you're going to get hit. And when you get hit, that your all percentage is going to be lower than 4%. So, and that's where the panic starts coming in. And me, I'm more of a preventing that feeling, because I went through it already here. This is the worst that I've ever experienced. On December, I think it was the 24th. I don't know. Okay, December 21st, 2018. Um, this was the, you know, I was down negative 5 point. I was in the negative, you know, and I never want to experience that again. So for me, playing this ratio game, and my strategy to 1 million is to play the ratio game. And my ratio is, my current ratio for 2019, because every year I reevaluate, but for 2019 is 60% stocks, 30% index funds, and then 10% REITs. And then this is my stock market crash portfolio proof that this ratio works. So and a little for me to I'm gonna break it down even more. My strategy for 2019 is what I do is invest $1,000 a month. First is the 60% the stocks, which I'll invest $600. There's two categories that I look at. The first one is first growth valuation with no dividends because the company reinvests the dividends back into the company, which is the 30%. So that'd be $300 of the 600. And examples of that are pretty much all the FAANG stocks. Their growth is so fast, but they pay no dividends because they reinvest those dividends back into those tech companies. And then the second category is slow growth valuation with dividends, the other 30%, which is the other $300. So that's the 600 total. And examples are McDonald's, 3M, and then Lockheed Martin. And those are paying dividends per share more than $1. So those are dollar or more dividends, and you'll receive those every 3 months. Okay, the second section is or ratio is 30% index funds, which is another 300. So that brings my total up to 900. And with that $300, with half of that, I'll invest in iShares, SPDR, and S&P and Vanguard, which include Precious Metals ETFs, $50, Buyback ETFs, another $50, and Bonds ETF, the remaining $50, which will bring my total up to $300 for my index funds. And as you know, bonds ETF are known to offset stocks in the bear market. So I'm testing this theory out. So that's my second ratio. And then last but not least is 10%, the remaining 10%, which is REITs. That's my remaining $100. So that puts me at a total at 1,000. And then with REITs, REITs are known for monthly dividends. And my strategy for REITs is pretty much while I'm waiting on that 3 month dividend, those months in between, I'll be able to collect. Um, so I'm not waiting for those 3 months so I can start collecting nice dividends in those months waiting for that third month. So months 1 and 2, I'll have nice dividends where I can start buying companies also to start. My end goal is it's all about the all. It's all about the getting that up. I mean, my goal is to get it up to 20%, you know, with this strategy. So once I get to 10%, I'll know that this ratio is working. If not, I'll look at the end of the year. If I can't get it up to 10, I'll readjust it. I'll look at it and see what I need to go. Do I need to go more aggressive? Do I need to change up the ratio to 70% stocks, 20% index funds, that were 10% REITs, or 50% stocks, 40% index funds, 10% REITs. So every year I reevaluate, and pretty much if you're investing in the market, you're winning. That's how I see it. So I can concentrate on other things and not stress out. To me, really, I like it when the market's down because I can really see it. Really pushes me mentally to understand. Okay, what can I do to better my safe, to maximize my portfolio, to make it strong. When it crashes, because in a down market, you don't even have in a down market you wouldn't have to worry about your portfolio because it's going to be stock market proof. But all of us know when the market's up, we're all happy. That's a no-brainer. So I think that getting to understand this your portfolio and understand it in crashes, in declining times, to see how it sustains a bear market. So that's it. That's what I wanted to show you guys. That's my strategy to 1 million. Until next time, let your compound interest speak for you. Alexa, smile.
Sure, I smile all the time.